So, hope you all again had a sumptuous lunch. We have an equally interesting session as I told, but before that, we have one very special announcement. So, to make that announcement, I invite Mr. Ravi Veeraraghavan, President of IAA Madras chapter, on stage.
Thank you for patient lunch. Sorry for the delay again. Because we had 2 or 3 other speakers I didn't want to miss, so the cyber, hopefully you found it interesting. Happy to take feedback. Somebody was asking about the recordings. We'll load it tomorrow or day after on YouTube, so you will see all the recordings also as well. And an important announcement, just 5 minutes. We've started, there's a part of the Madras chapter. We have a Coimbatore club, which is, we did a session in September or October, which is run by a set of people. Now we are going to announce the Kerala club as well. So I have Mr. Balaji, welcome on stage Balaji. So they are starting this chapter already, the enrollment is going on. So across, he's from the SIRC Ching as well. So thanks Balaji, please come on stage and take your seat, and madam also. So part of this session is to, part of this introduction is to introduce him to our fellow members as well. Thanks once again. And there will be a lot of activities across 7 cities in Kerala. So we are taking into the regions. So one of the objectives was to take it to other cities as well. So one objective we're trying to achieve. And anything, Balaji, you can take forward. SIRC, Rekha madam, please come on board. Thanks once again, Rekha. So you're seeing a lot of interest coming into play, and there's also a lot of activities happening from the chapter as well. You saw the morning session, even though there was some delay, but there was a lot of commitment coming from all CEOs were on the dais. So that was one big commitment I had to take from them. And they're very, very supportive of whatever we're trying to do from IAF benefit, but also from there's a pure society initiative coming into play. And thanks for supporting us in the event as well. Please be patient. There are a lot more sessions coming on Treasury, one on cyber, one on landscape, on regulatory, and then there is a final session on audit investigation. Balaji, a few words before. Yeah.
Good afternoon to all of you. Thank you very much for the opportunity given. Even though it was at short notice, we could get like-minded people to join IAA Kerala and start this Kerala club. And no wonderful thing than to welcome with a lot of big heart Rekha madam, who is a SIRC member as well. I think should give her a thumping welcome into the board. Welcome Rekha madam. She'll be the star of our Kerala club. And all of this has happened only because of Sridharan's support, who has been a mentor all along. And with few phone calls we got, I said, thank you very much, sir. And it's an onerous task given on our shoulders to take it forward at Kerala. I hope with the support from all senior members of the IAA Madras chapter and also from the Almighty God. And I was also very happy to meet my guru, Sri MP Vijayakumar sir, whose thundering classes still very vibrantly echo in my mind every time I see him. And with the grace of my guru, so all 3 has come into. My mentor is here, my guru was here, and we have our guiding star, Rekha madam, and all the ingredients for a super successful Kerala club is the rest is in your hands to provide us support. Thank you very much for this opportunity. And I request Rekha madam to add few words to this.
Very good afternoon to all of you. I hope all of you are awake after the very sumptuous lunch here and the very wonderful sessions. So indeed, I'm very, very privileged to be a part, especially representing Kerala is always my dream, as Balaji sir rightly told. And I think no doubt just one day into the sessions, I think the kind of networking that we get and the kind of power pack sessions and the speakers we have, it's excellent. And I think I should first thank MB Sridharan sir for having introduced me here. I have been a well-wisher and guide all throughout my career and even for my elections. And Ravi sir for again helping me to be a part of this wonderful event, and Balaji sir for also starting for this Kerala club. I'm sure most of you who are here will be having friends and networks and colleagues out in Kerala. Please put a word of mouth there so that we'll be very happy to expand and have similar sessions and very good networking, especially in Kerala, where number of sessions happening is very less. So anyway, thanking you for all your cooperation.
Thank you, Rekha ma'am, and a special word of thanks to Ravi sir, who very patiently allowed me to do it my own way rather than at the pace that is supposed to be done from there. Thank you, Ravi sir, as well.
Thank you. Wishing the Kerala chapter all success. So now we move on to our post-lunch sessions. We have 3 power pack sessions. Before that, just a small reminder. We have our sponsor stalls outside from GRT, NCS, Joy Lucas, Great HR. Request you to please have a look around whenever you're free. And now, let us move on for the first post-lunch session, a very interesting and contemporary session on treasury risk and the way forward. To anchor that, we have Mr. Ramkumar, Board of Governor, IA. Please welcome him on stage.
Good afternoon, all of you. Post-lunch session. So obviously, I don't want people to take it easy, considering the subject involved. The session is on treasury risk today and way forward. To enlighten us on this subject, we have 2 eminent speakers, Aruna Pannala and Mr. Raghothaman. I would request both of them to come on stage, please. Thank you. To set the context and also to introduce the speakers, as the caption says, changing landscape in the world of fraud and unknown, we are living in a very uncertain world. Uncertainty brings a lot of disruptions, and large businesses are being challenged by startups, and the industries are witnessing technological transformation. Besides that, we are witnessing 3 things: globalization, digitalization, and formalization. All these things pose huge challenges to the treasury managers who manages risk. It's a very important subject, and depending on in which part of the geography you live and in which industry you operate, the challenges vary. To enlighten us on this subject, I would request first Ms. Aruna Pannala to discuss on this subject. Just to give an introduction about her, Aruna Pannala has been with Deloitte for 17 years, and she is the partner focusing on operational specialization on the treasury and risk management related matters. And her key skills include banking, enterprise risk management, treasury management, liquidity risk management, and interest rate risk management. See, all these things are extremely important for treasury guys. And particularly if your operations are there across the world, then there is a very huge area, and every day you are sitting on a time bomb. That is the kind of a thing. And she is specializing in that. And as far as Mr. Raghothaman is concerned, just to give him a brief introduction, Sir is a chartered accountant, and actually he needs no introduction. His experience will be 1.5 times of the average age of all the people assembled here. Okay, so we are nobody to give him a big introduction. Sir is a very senior banker, okay, and he has been with ICICI before it became ICICI Bank. Okay, so he has seen, or rather has been instrumental in industrial growth of India. He has contributed in his own way, and he has served in the capacity of an independent director in most of the industrial groups across India. I think with this short introduction, I would now request Aruna to make her presentation. Thank you.
Hi, good afternoon. Am I audible? Loud and clear? Great. Thank you very much for this audience. It's a privilege to address you. I thank the Institute of Internal Auditors Madras chapter. I always keep hearing about a lot of activity that goes on in this chapter. I've never actually had the opportunity to be here, so I'm thankful for the invitation now. So when I was introduced, there's a lot that was said about financial risk, liquidity, currency, treasury, so on and so forth. What I tried to do is try to amalgamate a whole bunch of things that I do, and I put it together in a package. My session is going to be having 3 distinct portions. I deliberated a lot about what might really interest you. I didn't want to tell you about the basics of what is interest rate risk and liquidity risk and currency risk. All of you are very familiar with it. So I really deliberated what will make you sit up and listen to me, right? So I figured a case study would be good. Case study where you will highlight what the risks are and I make notes would be good. The second part of it is I'd also like to share some trends on what's happening in the industry with respect to treasury, whether it is the markets, whether it is technology, whether it is some of the global winds of change, I'll call them, that are shaping the way we are going to look at financial risk and treasury risk in particular. I also thought I'll take this moment to kind of get some exciting stuff through, which is talk about one of the current crises that's playing out on cryptocurrency. Would you be interested in that? Right, that's what I thought. So I thought I'll tell you a little story. You would have read it in multiple, internet sites. But I thought that's a useful case study to kind of address some of the basic flaws in the way the whole structure has been set up, right? And it will go back to, you won't believe the number of times the same mistakes, same control failures, lapses have happened over and over again. That will help us as internal auditors to say, well, we might take some as a given, but they aren't, right? So I want to use one such story. And I was also told that I should touch upon some geopolitical issue as well. So I will talk about de-dollarization, whether it is a dream, a myth, a reality, something that's brewing, but definitely something that is going to shape the way we think about treasury and associated risks, right? I prefer generally to walk around when I present, but today I will be stationary. But what that will mean is you will help me become more active. Is that a deal? Good. Okay. Nothing like a great audience who's responding and then you kind of get into the flow, isn't it? No, I'm good, thanks. Thank you. Okay, so let's start off with a case study. You all would have heard these names, right? If it is showing up. The screen's not moving at all.
Okay. Slides.
I don't have. Okay, yeah, so those are the things I said I'll talk about, trends, case study, and de-dollarization. Oops, this is moving fast. Okay, for some reason, one particular slide is hiding from all of you. Essentially to talk about, the prominent bank failures, if you will. You all heard of Northern Rock? Northern Rock? Any reason, any ideas on how it failed? Northern Rock was a mortgage company, mortgage financing company in UK. It failed because it was trying to finance in the from the wholesale market and lend in the long term, right? And when the markets and the spreads increased in the short term, they couldn't finance it anymore. They couldn't roll over their loans anymore, right? It's a classic liquidity issue which brought to fore whether or not companies or financing companies and banks have sufficient liquidity in the short term. It brought that issue to the fore. Otherwise, financing from the wholesale markets was a very common business model. Would you all agree? Right? Banks have the opportunity to go into pick up deposits, but it takes time to build that deposit base. Alternatively, you simply go and fetch the funds from the wholesale market. It was a very popular operating model, but Northern Rock failure brought to question whether that's a sustainable model or not, right? All of you have heard of Archegos? Archegos meltdown? Archegos was a hedge fund. It was actually a family office that was taking humongous bets, and it brought down, almost brought down two global investment banks, Nomura and Credit Suisse. Of course, they're not down and out, but they've suffered significant losses, all because they were Archegos, who was the broker client for these companies, had taken a very, very risk, in proportion to their assets, they'd taken very, very high risks, and they lost with the volatility. Have you heard of Continental Illinois, the bank? Continental Illinois, the bank? And that's the case study we will do actually today. Is I don't know if you can see the numbers very clearly, but what I wanted to let you know is that this was a bank. This is in 1902 or something. The bank started, and then a bunch of amalgamations. It was one of the 7th largest U.S. banks at that time, and we're talking about 1984, right? The conditions precipitous for the failure were, number one, this bank, there was a law in US which prohibited banks from opening branches outside their domicile state. But they wanted to grow big, and they were doing really well, and they were taking risky bets with respect to, there was an oil and gas boom, and they were trying to, take a piece of that action as well. So they used to regularly go and buy loan portfolios from other states. Right? That's the operating model. Now this bank was also growing very, very aggressively. As you can see from the peers, compared to the peers, they were growing more. Compared to the peers, they were also looking at more, what in India we call bulk deposits. They were focused more on bulk deposits to raise funds, right? More volatile deposits. And you'll see that NPAs also started picking up by 1982-84 as well. But the real story is not this. This bank was the reason you today hear about too big to fail. You heard of too big to fail, right? This is the bank, this is the failure of this bank that brought to light too big to fail. And the US started thinking, what should be done? What can be done when large institutions go down under? How much can we save them, or should we save them? Or should we build in resilience that they can save themselves, right? The conditions, so just as a case study, this is too delicate. Okay, when it shows up. But just as a case study, right, this was, this bank in 1982, before Continental Illinois went into problems, they were anyway growing very, very fast paced, etc. But in 1982, a very innocuous bank, Penn Square Bank, went down under because they were taking very risky bets, and they were taking bets on oil and gas related loans. It's in a different state, no problem, right? You're growing in your own book, except that Continental Illinois picked up $1 billion worth of loans from Penn Square Bank. And the markets started getting very jittery, because if Penn Square defaulted and they're going bankrupt, chances are the portfolio that you picked up from them also is not good, right? And when markets started getting jittery, also remember, they were financing their loans from the wholesale market. They had at that time about $28 billion of deposits. Out of that, $20 billion was more than $100,000 a piece of deposits, which means the federal insurance, the deposit guarantee, DICGC equivalent there, FDIC, was not applicable to those deposits. Consequently, there was a run on the bank, so all the large depositors would want to come and take the money away. So what started off as an operating model issue, where my operating model, the business model, is to buy loans and grow my portfolio. It was a good strategic call at that time, because you wanted to grow ahead of your competition, right? And strategic call turned into credit risk, turned into a liquidity crisis for them. And then, because the bank was so big, the risk was not limited to what was happening to its investors, but also to the entire financial system. So which is where the Fed had to step in through its agencies to bail them out. There was a funding of about $4 billion. That was not enough because the run on the bank continued. And that is where they had to rethink whether they can allow this bank to fail. Eventually, in 1994, after having repeated attempts of trying to save it, in 1994, Bank of America acquired it. Excuse the slides. I hope you pay attention to what I'm saying. It's interesting enough. Please excuse the slides. What do you think of this case study? Any thoughts, any comments on this? Strategic risk, or strategy to credit risk, to liquidity risk, to too big to fail, to financial system related risk. Does it happen here? Sure.
Well, I'll just only add on to her presentation of an American bank to an Indian bank. How many of you know about it? This was a Hyderabad-based bank, started by a career banker, high profile, very aggressive. He thought he will beat the State Bank of India. Name? GTB. That's a very classic case where he had leveraged to the last of this mismatch of asset liability. Just to grow the book, his balance sheet didn't support, his equity didn't support the kind of borrowing he was letting into. And what he talked about, the volatility, it was not volatility, it was tsunami. Ultimately, the RBI had to come in, close it, and Oriental Bank of Commerce took and merged it with that. Thank you.
Thank you, sir. I was hoping to get a more recent example. Anyone? Any more? Recently, did we have any case where the, let me give you the sequence of events. Corporate governance issue, because we have one too many, but I was referring to a bank. There's also the concept of no risk is isolated, right? Risks continue to interact and emerge to be much bigger than what your identity is, right? And some speakers in the earlier sessions also spoke about looking at risk management in a more holistic manner. If you want to read more about this case, there's a lot of detail on this on the net about this. Yes, please. Yes, please. Sure. Terrific question. Oh yeah, please.
No, I'll again supplement it for the GTB, as much as I know about it, because I'm not involved at all. In any way whatsoever, except that, Ramesh Galli was working as an executive in Andhra Pradesh State Financial Corporation. I had met him a couple of times as part of inter-institutional meetings. I think there are two twin problems in GTB. He had to keep increasing the profits. That means he had to increase his net interest margin, whatever you call it as, for him to show profit. So he had to he gave a go-by to so-called asset quality. If you come, if he sees, he can get 18% from you, he doesn't bother about what you want to do, he'll give you money. Because he was interested in 18, but not the risk-adjusted return. That was the first. The second, as I said, the liquidity mismatch. Because he had to do that, and he was he thought he had to do it yesterday. These are the twin problems which had happened. It's just not credit risk alone. It was a credit risk, and what he did not bother about was his reputational risk. If had he thought about it, he would have been more moderate. Thank you.
the continental Illinois issue? Yeah, yeah, absolutely. No, yeah. So the two things that have happened, the NPA of this particular bank also was higher than its peer group, number one. Number two, because the Penn Square Bank failed and these guys have acquired a portfolio from them, the expectation of the market that they would have bought spurious assets or toxic assets was the reason why there was a run on the bank. It was not, so, okay, so if, just changing it a little bit, right, if I were to change the case a little bit, if this was a bank that had very low NPA, like HDFC Group, right, and then some other bank failed, would you ascribe better underwriting standards or due diligence standards for that bank, and consequently it would not have been amplified or accentuated? So the question is, it's never in isolation. The market it's a continuous, nothing, in economics we keep saying all things equal or at a point in time. There's nothing at a point in time. It's the reputation that continues. It's what you've done so far that continues to create a perception, and the risk manifestation happens after that. So that's how I would look at it. Yeah. Well, thanks for this. Now I have two of them, so I'll be much louder. Some key trends, right? I just thought I'll go back in time to talk about what's currently happening. World economy in recession or just UK in recession? UK has agreed that they are in recession. They have announced it. US, yes. So US this time around. So yeah, I was listening to one analysis by Saurabh Mukherjee. Some of you invest in the markets. He's a great guy to follow. And he was mentioning that every single time that the US had a recession, 2 years later, India actually had a bumper of a growth. Right? It was his analysis. For the last 40 years, he's done that analysis. But this time around, he says that the recession, or impending recession, if you will, in US is slightly different. Every time they had a recession, they didn't have the unemployment, they had the unemployment rate shoot up. But this time they have record low unemployment rates, and yet recession. So it's being triggered more from a supply. It's being triggered from the war than anything else. So what could happen in the next 6 months or the next 1 year is essentially also compounded by the fact that China is going through its lowest, possibly in the last 4 years. They're hitting about 3.72 as a growth rate, expected growth rate, right? So as the, we look at the historical data, US used to be the biggest trading partner, but then it's moving towards China, and China is under stress, and Europe and European crisis, etc. So all of that put together, we're expecting a recessionary factor. But what does it mean for India? Hunky-dory or? No, this is where I collect survey points. What do you think? Nervous, cautious optimism, optimistic, exuberance. Where is India? Cautious optimism. Any other view? House view is cautious optimism. Okay, so we'll go with that. What's happened to the interest rates? Interest rates, okay, this is not moving anywhere. So yeah, interest rates have been, RBI has increased in interest rates 1.9%. But what has also happened is, if you look at income, our inflation is not too high. You would agree? It's been well controlled. But that's not the case with the global markets, right? Europe, UK, US have had record inflation. Apparently, and I have not done the study, I'm only quoting it from somebody else's analysis, is that if you look at the 10-year yield between India and rupee and dollar, they're the closest they have ever been. Because US has about a 4% interest rate, and they have a 9%, about 9% inflation, and we have about 5% to 6% inflation, and we are at about 7%. So we are the closest variance in history ever, recorded history ever, with respect to 10-year yield. God knows what that means. What does that mean? Is it a bet on India, or is it a bet on the Western world? Cautious optimism. Okay, So, rupees depreciated. Rupees depreciated a lot. Sorry? Okay, that's a better way of putting it. Dollars appreciated. Why has dollar appreciated so much? Why has dollar appreciated? Anyone? Yes, geopolitical influence, safe asset, right? It's a perception of a risk-free asset class, right? So, yeah, money is going there, and also it's compounded by the fact that now we made it easy to trade in rupee as well. NDFs, anyone? Yeah, non-deliverable forwards. RBI has opened the market for even banks to trade in NDFs so that they're able to hedge, they're able to, Indian corporates can do that. And I'll get to the next slide on this one. I don't know if you can see. Sure, sure.
I'm just going to quote a very simple, innocuous question and an innocuous and a spontaneous answer. I asked one of my friends when I was in US. I said, the way the US is doing and the dollar is, all of us know the dollar is overvalued. Tomorrow, if all the people who are holding the currency draw it back, that country will collapse, the currency will collapse. But ironically, the largest holders of the American Treasury are China and India. That's an irony. When I asked him the question, he said, sir, please understand, 65 to 70% of the goods and services worldwide is consumed in the US. There is no way US can fail. If it fails, the entire world will fail. So everybody's interest to pop up US all the time. Have I answered you?
Well, hold on to this view. If you agree or don't agree, just hold on to this view, right?
No, we can hold on to the view.
Because it's going to come up for a discussion, and we're going to debate this very heated discussion on this. Okay? For some strange reason, this ain't working. Do you all agree that Murphy is the most intelligent man that ever walked the earth? Do you agree? Unfailingly, Murphy's law strikes. Unfailingly. Yeah? Or at least me. The lightning always hits me. Okay, so this is, further analysis of what's happening. I've just tried to be smart and put some graphs around it, but essentially the same thing. If you look at what is happening to the currencies, dollar is appreciating in relation to GBP and euro, right? And that's understandable, it's geopolitical. Also, I wanted to come up with a couple of other trends. Apart from the markets, RBI has, after 2008, there was a complete clampdown on exotic derivatives to be offered for corporates, right? But now they've opened it up. 2020, 2022, they've opened up. They've said, you can do exotic derivatives. Of course, there's customer suitability that needs to be evaluated, and the size that needs to be there as well for the 5 billion rupees, etc. What that means is now corporates have more options to be able to hedge the bets. Now you also have the gift city. So some of the banks, large companies have opened their offices there. You can also trade in the NDF market, and you can have, it's a pathway to the global markets as well. What all of this means is more options to reduce the volatility either in your balance sheet or in your earnings, right? The other trend that is also playing out is on, I'll give up on this. The other trend that's also playing out is on the technology. Enough has been said about this, but I also want to tell you that even within Treasury, we're talking about centralization processes that can either get you data that you can use more real time, near real time, payment factories, use of RPAs to reduce manual work and improve the efficacy and efficiency of processes, and also implementation of integrated systems. Now, if companies want to implement, go for exotic options, etc., you need to have sophisticated systems as well. So what that means, that ain't me. That's not me. That's not me. So what that means is they are looking to invest in technology that can help them. RBI simply says this, right? In customer suitability, do you have the necessary infrastructure to take on exotic instruments as well, right? So those are the trends that are firmly setting in, and you will see more of it. Somebody also talked about the fact that, I think one of the sessions talked about use of machine learning as well, right? So you will see a whole lot of these techniques being used, not today, but definitely some of the large corporates that we're talking to are already talking about, Murex. How many of you have heard Murex? Murex is a solution that you use, very large banks, very large treasuries use it. Now corporates are buying Murex as well to kind of, corporates are using treasuries as well to kind of manage their exposures, right? Now let me come to another trend that you also want to be wary about is the ESG. There was some operational resilience session where we talked about ESG. As a treasurer, one needs to look at green financing, right? There is going to be insistence from the investors, if not local, definitely global. You are going to go for road shows, and there's going to be an insistence on what is the game plan, what is the roadmap you have as a company towards carbon net neutrality or ensuring zero emissions, right? So what is your role and how do you play that out? And also fairly regularly you might need to give inputs about what you're doing as a business to go towards carbon net neutrality. I'm not going to harp more on that. I just want to capture all of this to say these are some of the trends that you're dealing with. These are some of the undercurrents that you're dealing with. And now I'll come to my favorite thing, which is cryptos. Why am I talking about cryptos really? Is that how many people have traded in cryptos in this room? Terrific. What's been your experience?
But then you have Bitcoin, which basically drags the entire market because that is the most well-known coin. And then you have safer options like USDT, which basically derives its value from dollar. So those are, safer options to trade, but of course you don't make a lot of gain.
Yeah, that's the whole deal, right? If you want to trade, you want to make a gain, but make a gain means there's a possibility of a loss. But sir, you wanted to share something? Passive investing, okay. But it's nice to kind of experiment, and I must congratulate you. We have early adopters of something new that's out there, right? So there are various types of cryptocurrencies. Some which are pegged to real assets or commodities like the dollar or any commodity price, etc. There's some that are based on algorithms, right? And then there's a whole world of bitcoins and Ethereum, etc. Now, it's only logical to say that anything that's pegged to a real asset, volatility will be lower than something that is up in the air. Any news drives the market really mercurial, right? And so you see a lot of volatility. So for example, dollar rupee, if the volatility is about 7 to 15%, and USD Terra, which is a dollar denominated, dollar referenced crypto, is about 15 to 20%. The other cryptos, which is like Bitcoin, Ethereum, etc., are at 75% volatility. Aaj paisa banaya, udaya, tomorrow, nothing there, right? So hugely volatile. But that's not the story I want to tell you. These are early days. It'll stabilize. We'll learn more about it, and there'll be some currencies that will come in. But that's not the story I want to tell you. There are you heard of FTX, right? FTX. What do you think went wrong? What do you think went wrong?
There is enough and more data about the lack of operational procedures about the fact that the employees were buying homes in Bahamas primarily because there was no process of internal control. They were routing money through different entities. There was no consolidation of accounts. Their auditor, in fact, the CPA also was a virtual CPA. So just a lot of lack of checks and balances in place.
The 101 of controls and governance failed completely. in a nutshell, the story is this. Sam Bankman-Fried was the poster boy of cryptocurrencies. It's called the golden boy, actually. That's the name given to him. He started this exchange FTX in 2019 with a bunch of his classmates, right? And simultaneously, he also opened this firm called Alameda Trading that was to trade in cryptos. What he would do, and by the way, because he's such a brilliant chap, he got the likes of Sequoia Capital to invest in him. So he raised about $32 billion, the AUM, if asset management, $32 billion worth of funds he was managing. But what he would do, and I'll tell you now the list of corporate governance and control failures, right? What he would do, trading firm Alameda Capital and FTX, the owner was the same. The management was the same, right? Number one. Two, the clients were asked to pay money into Alameda's trading account and nobody raised an eyebrow about it, right? I am an investor into, or I'm putting my funds into the fund or FTX. Why am I having to send money to Alameda Trading, which is a trading outfit, right? Nobody raised a question. Third, Alameda Trading was actually taking positions against its own customers, which is 101 because they were sharing freely information, right? SEC would really, there's going to be a lot of ire, but nothing happened for 3-4 years, right? They had issued what is called a FTT, a token based on, for example, if you go to make money out of FTX, right, out of the trades that you have, instead of giving you dollars or whatever, I'll give you FTT. FTT is basically a token that I have issued. Out of thin air, I tell you, I'm giving you 10 lakhs and that's what it is. And I call it, whatever I call it, right? Ether. And I'm giving you 10 lakhs and people have taken that and eventually it amounts to nothing. And not only have they given it to people, they also have that on their books as $5 billion of FTT they have as their assets. It's a classic case of wrong way risk, right? You're taking a bet on yourself and the bet goes bad, you will go down with it, right? This is not the end of it. The CEO was apparently his girlfriend or something or friends from the batch and she had no experience whatsoever of running, forget a crypto, any company. There was no due diligence and fit for purpose, nothing there, right? And yeah, they were operating out of Bahamas, no problem there. You can always register your company there because of tax purposes. But they were a bunch of cool dudes sitting out of resorts, etc. They bought expensive cars, expensive everything out of the money that they've collected from the investors. On the balance sheet, when they look at it, they had liabilities worth $11 billion and funds worth $1 billion. That's not it. The story keeps going on. FTX is supposed to have an algorithm, which is why it became so popular. It is supposed to have an algorithm which is so fail-safe, but they were hacked into and $500 million worth of money was taken out. It's disappeared. Nobody knows how. Chances are people think that Sam himself has taken it, but they've taken it. This is also not the end of it. You know why all of it started? Because Binance, which is another exchange, was getting jealous of how well this guy was doing. And so he said, let me dump the FTT that I have. And that's when it all started. But ideally, all of this should have been contained, right? It is only to do with FTT. Only the exchange. The exchange did not have proper control, so if exchange will have a problem. But will it have a run on the entire set of cryptocurrencies? That's what's happening today. Let's say it's all early stages. Let's say all of this is happening in the currency markets because it's early days. But what about the governance and controls, right? All I want to highlight through this story is that oftentimes you look at it from Barings Bank to FTX today. If you go back and look at the story, it's the same set of controls that have failed. It begs the question, the same guy who was a superstar until a month ago turned out to be the guy who ruined you. do we have a blind side for people who we imagine to be superheroes? Question mark. Right. Now I want to get to the next session. I hope I have the time. I'll take 5 more minutes and I'll pass it on. This is on de-dollarization. Just very quickly, timeline. Before dollar, what was the currency that was used for world trade? Pound. It was GBP because they ruled half the world. So it was GBP until 1921, the First World or end of First World War. That's when it was USD, and USD on the backing of gold as a currency, right, as a real asset. But come 1974, even that went through, and they said we'll need to pump in more money to kind of prop up the economy. So gold as a link to currency was also taken away. But from here, and so that sustained us for 50 years. But from here, where do we go? What is happening currently? Can dollar continue to be this currency that we go to, this currency that's considered a safe haven? What do you think? Somebody said, I think sir said, don't worry, US is going to remain. Otherwise, we'll all die. So I said, hold on to that thought, right? So yeah.
I just had a small dimension to this currency what you're talking about.
Sure.
I recall that because it's my personal experience, and I was sent to Japan for a training, and I was given some dollars. And as part of the training, they were also giving me yen as a daily allowance. At that time, the dollar was 16 rupees per dollar. Today, it is 81 or 82 per dollar. After the Reserve Bank has pumped in a couple of $1 billion to bail out or keep that somewhere around that figure. So you can, and where did the Japanese yen go? Japanese yen went down, but it is again come back. I don't think that there are many parallels to this kind of volatility in any other currency which I have seen. Thank you.
It's always great to have two opposing views, isn't it? Especially if you're on the dais. That's what happens in the markets, and that's what propels the markets. Right. Yeah, so what I wanted to actually put out is not to say that we will magically get into a scenario where dollars are no longer going to be relevant. All I wanted to communicate is that there are serious challenges for dollars' hegemony or supremacy as a world currency. Sorry, sir? That's a great question, because there have been wars that have been fought. Absolutely, that's a story we've heard as well. So there have been wars primarily to ensure dollar hegemony. Dollar hegemony, yeah, absolutely.
Okay, again, as you said, I'll be giving a very different dimension to that, the Iraq war. I'm not going to the political part of whatever it is. See, those of you who generally know the mainstay of the American economy are their defense products. That is why you will see every time when there is something, US will provoke a war. Not necessarily their involvement. You take Iraq, you take Iran, you take Saudi and Qatar, wherever in the world. Sorry? Ukraine. No, all that I'm saying is, these are all the things in a way are supporting the US economy in a place and also protect the dollar. The only thing where they are currently in a bind, the US, and more than the Europe, is the kind of the so-called donations they are giving it to Ukraine. I mean, the amount of, even then, the government is subsidizing those industries. It is keeping the American economy growing, but at the government level, they have deficit, and they have to also support the other NATO countries. So many things are there. So all that I'm saying is that there are too many dimensions in the Iraq war. Not that. That is one of the reasons they were talking about. Other reason they were talking about was that they wanted to control. If we again look at historically, America has always made sure that they will keep the Middle East in the boiling pot because of the oil. If they wanted these fellows to exhaust all their oil, then they are at their mercy. That's the deal. Thank you.
I told you, geopolitical issues are always fantastic. You can always have a debate and discussion. But I will bring you back to why we think there are some really shifting sands here, right? The first and the foremost is, it has been the currency of exchange, not just exchange, currency of store, right? It's a store of value as well. All the central banks used to actually keep reserves in dollar. The other thing also we need to understand is that the role that SWIFT plays, SWIFT, which is where you use it for interbank communication, the role that SWIFT plays. SWIFT, is owned by about 2,000 different banks, but largely oversight is provided by the Western, supervisors. And there are 43 banks that settle the payments remittances that happen, and 43 of them are US banks. And there are about 11,000 companies, 11,000 different entities that are indirect participants in the CHIPS, what we call as the CHIPS transfer mechanism, payment mechanism, right? Now, about 90 plus percentage of all dollar payments and remittances that happen go through CHIPS. The balance go through FedWire, right? As long as as long as SWIFT, the fact that there are currency reserves that are going to be maintained in dollar, and the fact that oil and commodities are going to be priced in USD, nothing can happen to dollar's hegemony. But what has happened post 2008, right? When 2008 happened, it's not that the banks the world just blamed the banks. They blamed US. They said it's because US mismanaged its banking system or financial system, this has come about on all of us. So let us get away. Let us see what we can do to get away, right? Decouple ourselves from US. BRICS was born, right? 2009, BRICS was born. This was an attempt to create an alternate to IMF and World Bank to see that we'll fund ourselves, fund our economies ourselves, right? That's the first. We never saw that for 50 years. This has happened now, right? After 2014, when Crimean War happened and sanctions were imposed on Russia, they went and created their own SWIFT network. It was for their own domestic purposes, but they created one. They said, we don't want to, we can't use SWIFT anyway. But see what happened when Ukraine war happened, right? Visa, MasterCard, all of them switched off the network. The only thing that saved them was the fact that they had their own network, payment network, and they also had another network called MIR, which is what was used for all retail payments as well. That saved them. 2015, China said we will create our own SIPs, right? Which is again an interface for payments. They created their own. What did India do? RuPay. We did ours. And all of us are now looking at how we can have a multi-bridge to kind of get all of them together. Why should there be SWIFT alone, right? It's controlled by somebody else. Let's create our own, because sanctions, if, you would have heard this, I'm now sounding like a TV reporter, but when currency is used as a weapon, sanctions are used as a weapon against economies, we should have an alternate or a fallback. And these are all the reasons, right, that is precipitating move from dollar. The other thing, which is a huge trend, is central bank digital currencies. Currently, 150 countries are experimenting with their own digital currencies. What does it mean? It means that I don't need to use a dollar or a common mechanism to exchange. I can do bilateral trades with a guarantee that you can get money from me, and I will do it in e-rupee or e-ruble, e-yuan, whatever it is. And already bilateral trades have been happening that way, right? So these are the firm trends that are there. I'm not suggesting for a bit that it's going to happen tomorrow, de-dollarization, but you can expect and monitor these changes to see how we are moving away. I just want to point out, if this permits, to the second bullet point. It used to be 70%. The dollar trades used to be 70%. It's come down to 59%. right? The trend is there, the direction is there. Now, it's still significant. So all we're saying is you might find other alternates that are also going to begin to show up. May not be Chinese yuan, but maybe something else. Maybe we don't need one currency, maybe it's going to be a collaboration of multiple. On that thought, thank you very much for an engaging audience. I'll pass it on to, thank you.
Good afternoon, everyone. And as a second speaker, I have, as usual, a few dilemmas. One dilemma I'll have to make up for the overrun she had on her timing, because we are running pretty behind. I don't want to be a cause for increasing that overrun, and with the speaker waiting for that. Now, let me just take some 3-4 live case studies of how the situation was. I'm going to start from precisely the point which Aruna made, asset liability management experience of ICICI Limited, in which I was a senior executive. Now, if some of you may remember, in the last quarter of 1995, we had an unprecedented liquidity crisis across the whole country and across the whole system. And we were no exception. So we found, like again what she said, the same GTP model, that we had been ramping up our long-term lending very fast, because we had some other thought process going forward. We wanted a large asset base. And we were resorting to short-term borrowing, short-term medium, when I'm talking about 3 years, 2 to 3 years kind of money, which we were able to get in the market because of our reputation and our rating. But then came this period when the whole thing started crumbling. Our lenders were not willing to extend the tenure. They said, you pay back, and after 1 month you come, we'll give you a fresh loan. So what do we do for this? This is the kind of crisis we had. Let me tell you what is the strategy we followed. The top management decided they will remove the resources group from the decision making. Believe me, that's a very radical decision in a corporate system. You remove the biggest chunk of, ours is the resource raising business and on lending. They said remove them from the decision making. They formed a kind of a task force. I was a member because I was the business head. Then we had our investment banking managing director and a third person. The Treasury will come to us with a daily report. They will meet at 9:30. 15 minutes they will make a presentation of what is the expected, what are the balance yesterday, cash, that is lendable resource or repayable resource, and what is the expected collection during the day. Do we expect any additional short-term borrowings coming up, and what will be the end? So we were monitoring it every day, and then that is one pressure. The second pressure was with the kind of problem which was there across. We had to also collect money from our borrowers. How do we do it? The third and most draconian thing for us, more than us, is for the client. We had to disperse a lot of money for ongoing projects. If we don't have money, then how will they go for the project? These are the three dimension issues faced by us in that period. We worked relentlessly for about a year. Very ruthless. I don't want to go into burden you with how we managed it operation, because that is beyond the scope of what we are talking about. But what we are saying is the risk. We recognize the root cause of the risk, and we told the management, give us 1 year time. At that time, our resource mix was 50% short term, 50% long term. We said in 1 year time, we will switch it to 20% short term, 80% long term. We achieved it. I just thought I'll share it with you for the purpose of your understanding and whatever lessons you want to learn from this. The second one, which of course I have quite a few things, but I'll just take it on to real estate. There is a large real estate company, and in the real estate technique, typically in the real estate, when you are building an apartment block, your construction takes 3 years, but you don't get a funding for 3 years. So the the buyers are retail and they don't pay you upfront. You get maximum 20%. So this company had to keep on spending money and didn't have much of a resource by themselves, and they went on building short term. And the construction schedule got extended because of regulatory issues, whatever. But the bottom line is they had to resort to borrow from somewhere to repay, So they didn't have real cash flow coming into the company from operations. It had now come to a stage where they were forced to go and raise funds. The only sourcing available to them was from an ECB route, comforted by the owners abroad from their own assets there as a collateral. Now the issue there is again like what you were saying, the translation risk, the interest cost, and the currency fluctuation, and so we took a very considered decision in the board, because I was also part of the board. We took a decision that we will take it with checks on X, Y, and Z, and we also got the approval of the Reserve Bank to do that. But at the end of the day, it will still not solve the problem, because it will solve only the liquidity problem and the lenders coming on the throat, short-term lenders. But the company has to really sustain its business in terms of selling more and more flats and things like that. So this is where what I'm giving you a stage where somebody who doesn't have a dollar income, the classical thing is if you have a dollar income, borrow a dollar loan or a foreign currency loan. This is something which is beyond that, which we took as a conscious decision by the board to overrule that and then go ahead for that, with of course checks and balances. Now I'm going to give you the contrary of two cases. One is there are, of course, there are what you call the public knowledge. I'm not saying anything in secret. There are a number of companies in sectors, for example, in sugar. I can understand sugar, they have been raising funds in foreign currency because they were also allowed to export part of the production. So at least there is some kind of offset possible. And of course, there is a different issue. They all failed because of various other reasons. Some of the NBFCs have been resorting to raising forex borrowings. Even on the hedge basis, it is much cheaper than the rupee lending rate. So they are arbitraging on the differential between that cost and this cost. But God alone knows when that comes up for repayment, where are they going to find the money from in terms of the ballooning because of exchange rate. The third one is what we classically call as in large projects, highly capital intensive project where there's a lot of imported component. People are resorting to import them under government supported guideline. If you can import duty free, that means the capitalization is down, your operating costs are down. But you'll have to give a bond that you will export for a couple of years for an equivalent of value. Some companies were able to sustain it. There are a lot of companies who have gone into grief. So I think this should give you a very fair idea of how the so-called, what she talked about, using the currency mix, market mix and all that, can play havoc if it is not properly structured and not properly managed. I just wanted to touch about three sectors arising out of some discussion in the morning. I'll start with microfinance. Dr. She was here, and in fact at Belstar, I know her and I know the companies also, but I myself had personally an exposure into the hands-on microfinance sector for 10 years. Believe me, the performance record in terms of repayments from microfinance clients was far superior to the so-called industrial giants or industrial corporates. For example, in the company where I was the director and also a trustee in one of the trusts, our recovery rate was about 98.9%, bang on, and our write-off on bad debt was only about 0.5%, which means with the delay we were able to collect it. And then we had, of course, it is all 1 year old, so you can imagine the kind of this thing we had. For example, we talked about the risk mitigation, risk management. For example, when one of my friends wanted to start a microfinance company and came and asked me, "Sir, will you please help me?" I said two requirements. One is I'll find a CEO. Second, I'll find you a technology. This is the cash transaction business. So unless we have very tight control on things happening on a day-to-day basis. So we were able to find a technology supplier based on mobile, GSM mobile-based technology linked to a server. By 1 o'clock, we will get a trigger where are all the payments have been received, where are the delays. So the trigger goes across this chain and then immediately money is put. And then we also banking module in which you will know exactly whether money has been deposited or not. So this is the kind of the risk mitigation we had put it there. The other major problem which India has been facing as a country is the financing of the so-called infrastructure project or long lead projects. Because all our so-called tenures of, for example, liabilities which we were able to get 2 plus 5, that's it, 2 plus 6. But they require about 15 years, 20 years. So we tried an experiment in ICICI of promoting what is called as a takeout financing. That means at the construction stage we will take, then we will find a buyer to take over our loan for the next half, and then next half like that. But somehow that did not take on very well in the country because of the fact that the infrastructure projects were not really operating and they were not also generating income. And the last one, I will finish with this. Some of you would have known about fertilizer industry, which was where everything was controlled by the government, including the distribution, payment, and whatever you talk about. The classic case, of course, what I am saying is, not this thing, it is a public knowledge. Some of you can go back and look at the balance sheet of Southern Petrochemical Industries Corporation Limited. A couple of years back, if you go and look at the balance sheet, the receivables will be going up. What is the receivable? Subsidy to be received from the government. Now, where will they find the money to do? Will they run the company or will they run? They were running, the company for the government's benefit, because the government will not release the money, quoting the resource constraint, that constraint, which is happening even today also. I thought I will share this at a macro level for you to reflect over. Thank you.
Thanks, Mr. Raghothaman. Thanks, Ms. Aruna. It was a really very engaging session and enlightening session also. And in any debate, contrasting views are very essential and important to bring the best out of the speakers and also the audience. And just linking it to the economy, there is nothing like or other financial markets, there is nothing like a perfect market. It is always an imperfect world, imperfect market. Only then there will be a seller, there will be a buyer. Otherwise, there is no market. Okay? So, to that extent. And I just wanted to say only one thing and then conclude. See, when we talked about, when Aruna was explaining the, the case study and all, one thing which I remembered was in 2008, okay, I'm saying not because Mr. Vijaykumar is here, who is part of the regulatory system. As a person who has been practicing treasury guy, I can tell you the regulatory agencies in India have played a very, very crucial role. In my view, I have said this earlier, I am saying it again, RBI is an unsung hero in India, unsung hero. Because when rest of the world, rest of the countries were facing a lot of issues, they had the foresight to control and take the country in a regimented way. I still remember how Mr. Reddy was criticized in 2008 when he was increasing the interest rates, including us, all of us criticized. But when you see it in retrospect, I'll tell you, we must salute them for the kind of foresight they had and the way they guided the entire nation. I think the session was very good, and I compliment both the speakers for the excellent presentation, and Mr. Raghothaman for sharing your words of wisdom. Thank you. Thank you.
Thank you, sir. I now request Giridharan, Board of Governor, IAT, to hand over the memento. you, sir.